24th of June 2025, Crazy Revision with Kel. Today, we talk about the power of the OP route. It's going to be a short session because it's nothing much, but you must remember the importance of this because that is where yesterday a lot of people got hit by the market because we all know that on Saturday, we saw the US fire 3 missiles to Iran. And of course, it bombarded a few nuclear sites, which were empty, but that basically spooked the market. So on Monday morning, there was a lot of gap in the market. So we have a gap up on the gold, gap up on the crude oil, a gap down on the Dow, Nasdaq, S&P. But you will notice that what happened is that everybody was saying that, okay, it's a gap up right now, it should go higher, gap down should go lower, but the market went totally against the principle of that. And more important, not only they cover the gap, it went more for that itself. So let's go into the market and see what exactly happened. And of course, from here itself, we learn something that is very important to follow the OP route. Okay, so the first one go into it will be the crude oil price. Okay, crude oil. So let's go through the whole motion here itself. All right, let me just get myself ready. Done. Okay, so let's see what happened. Now, this happened on Friday, the closing, and then on Monday, opening, that was where the market gap up, right? So once the market gap up, by right, everybody was looking forward that the crude oil go to $78, or even $79 or $80 easily. But the thing is this, we always believe that the principle of the market manipulation. So open, high, low, close, there are only 4 prices in the market. Now high, you cannot know what happened. You will know where the high is until the end of the day. You will know the low, you will not know the closing. So the opening price is the one price that will never change, open since the start of the day, right? So the thing is this, we all know that closing price can be easily manipulated by the boys because high or low can be too, though there is some difficulty, but closing price definitely can be manipulated. So with that principle and the idea from there, if the closing price can be manipulated, then definitely the opening price can be manipulated. So because of that, we always follow one simple rule, is that if the market stays above OP, it's a buy. But if the market stays below OP, it will be a sell. Now, this is something that you must remember and must understand because that is how the thing works. So this morning, right, I mean, yesterday, what happened? The market opens and started to come down all the way. Now, by right itself, if the market, like, take into consideration that, okay, the gap up is to be too much and it's like beyond, it's overboard, then the fundamentals don't agree. Okay, fine. Now, from the opening price to where it was here, that's about nearly $3 to $4 already, right? So okay, that was good, but the market continued to fall, and that's where our KCB play into the part. Now remember, our KCB using, if you have a black candle here with a white candle as a guide, and the KCB we use a fresh KCB. So the next fresh KCB is somewhere here, and the next one is here. Oh my God, look at it. The market smashed down, break the first KCB, trade below, it went all the way down to the second one, and then it went third one all the way here. So oh my God, really incredible. The second junction one was crazy because it was easily more than easily $4 movement, and the market just go for it and killed off all the buyers in the market. So that is very, very crucial as a trader. And this morning for crude oil, same thing again. It gap up, right? It gap up a little bit, and then after that, it went all the way down. So same thing again, guys. If you have followed the OP rule, you're short about $68 and maybe like 50 cents. The low itself was easily $66. So you would have made easily almost $3 from the market just by shorting crude oil this morning through the OP rule. Now, such movement don't come every day because you can see in general, the market for crude oil is very sideways. The range itself is only like about $2 at most for the whole day. But this time around, we're talking about, wow, big movement, right? So these are all the things that the market, these are all the pent-up energy over here that motivated the price higher. And then now the market just coming back off, right? So that's why when the price was coming sideways here, I was telling my friends of mine, say, get prepared for crude oil. Crude oil can have a very big movement soon. And based on what we're seeing right now, the KSI for the crude oil was green, remember? So if you cannot remember, I bring in the crude oil for you right now. You take a look and you will understand why it is so important to actually trade with the rules. So you can see over here when the price was sideways and not moving anywhere. All right, we can see that the boys were buying heavily over here before they start to explode on the upside. And then when the market want to sell, you can see that it turns to red color and sell down together. So again and again, that tells you that it's so important to follow the OP rule, then go against the market. All right. So that is the first thing I want to share with you. Like, this is gold, this is a crude oil. Let's look at gold. Take a look here. So corn, this is gold. So same thing for gold. It had the same momentum, all right, but it's not exactly directly the same because you can see what happened over here. So what happened is that gold on Friday closed somewhere around here. That on Monday morning, it gap up. But once it gap up straight away, you can see that the price did go up a little bit to the high side, and then after that, it pulls back. Once it go below OP, look at it, it came down all the way. And just simply, this is right. Opening price is 3391. The closing price was 3347. So it's down by almost $50. But if you look at it, the whole day distance here is on the opening price of 3391. The low is 3347. Sorry, this one was the closing of 3368. Yeah, the low is 3347. So basically down by 45 dollars from the opening to the low before closing at 3368. So basically down by $23 from the opening price. Now today is like the same thing happening. The opening price is 3367. The low was 3333, and then after the market now closed started trading at 3350 approximate. So same thing again. If you short below OP, you would have made easily $10, $20 easily from the market by shorting that. So once again, this speaks to volume is how trading go. Like this one, when the gold price was trading above OP, you see the price goes up, close near the high, trade above OP, close near the high, and this one sell below OP and the market close near the low. So again and again, the OP rule is so much better than doing swing trading. It's so much better for you guys to try to buy low, sell high, because when you buy low, sell high, maybe periodically once in a while you make some money from the market. But if that means every single day is right to make money from the market easily, I think that's tough. So the OP rule will be a better choice for you as a trader. And I want you to remember this and keep it as a form of guide, because you will not want to miss out this. So yeah, so it's very, very important. So you look through the Dow Jones, you can see the same thing happening. And this is the Dow Jones. That is crazy. The market basically closed on this at Friday. Then the opening was here. So the market opens basically, let me take a look. Yeah, the closing on the Friday was 42253. The opening price was 1419.05. So gap down 300 points. And yet, by the end of the day, the market closed all the way here itself. And if you look at it, it's up by almost 600, 700, 650 points. And this morning, the thing gap up, main trade higher, stay above OP, went up easily by around 300 points again. So that's why trading itself is not too difficult if you actually follow the OP rule, right? So once supposed to sell, you just sell, and once supposed to buy, you just buy. End of the day, let the market decide. That will be better. Of course, you will say, "KEL, but I did swing trading before. I saw the high, I bought at the low, I make some money." But trust me again, the next day you'll pay for it by basically selling when you're not supposed to sell, and then the price just go higher, and then you lose out all your entire trade, right? So there will be days whereby you do the swing with the OP trade, you may not make money, but I tell you that once the market starts to move, you make back the money in bulks and pieces, right? So you really need to know that sometimes it's just a temporary downside, doesn't mean that you'll be forever down, all right? So hope you like this video and hope you enjoy something here and learn something from here yourself. This is KEL signing off. Take care. Bye-bye.